Okay, let's just dive right into it. We're going to break down one of the most violent and honestly confusing market moves we've seen in years. We're talking about precious metals, where a fortune was wiped out in just a few hours, only to be followed by a shocking recovery that left everyone asking the exact same question.
17%. This is the number that just blew everyone's minds. After silver absolutely cratered to a low of $71 an ounce, it didn't just find its footing. No, it exploded 17% higher in a single trading session. This wasn't just normal market stuff. This was pure chaos, then a massive sigh of relief, and then a whole lot of confusion.
And this, right here, is the multi-trillion-dollar question we are going to unpack. Was that gut-wrenching, stomach-turning drop the moment of maximum pain and therefore maximum opportunity? Or is this insane bounce just a classic bull trap designed to suck in hopeful buyers right before the floor falls out again?
But look, before we can even try to figure out what that bounce means, we have to respect the sheer scale of the damage that came first. This wasn't just some dip, this was a financial earthquake.
In just 72 hours, a staggering $10 trillion just vanished from the precious metals markets. Think about that for a second. Gold, the thing central banks literally stack in vaults for a rainy day, lost $7.4 trillion in market value. And silver's collapse? Even more brutal, with $2.7 trillion gone. These aren't just numbers on a screen. This was a historic, brutal deleveraging event.
And just look at this price action. I mean, these are supposed to be the ultimate safe haven assets, right? The bedrock of a stable portfolio. But here they are, moving with the kind of wild volatility you'd expect from some super speculative crypto coin. That kind of price action is a huge red flag that something much, much deeper is broken under the surface of the market.
The data actually started telling a story a few days earlier, flashing this big, bright warning signal from a place you might not expect. It turns out the digital world was about to call the physical world's next move with stunning accuracy.
This timeline just lays it out perfectly. The warning shot was so precise. Just watch where Bitcoin closes over the weekend. Well, it didn't just break its critical $82,000 support level, it completely shattered it. And then, like absolute clockwork, Monday morning rolls around and bam, silver opens in a total free fall. This wasn't a coincidence, it was a mechanical chain reaction.
And here's why. This whole sell-off, it wasn't people suddenly deciding they hated precious metals. Not at all. It was a forced liquidation event. So when these huge, over-leveraged funds that own both crypto and metals get a margin call, they don't get to sell what they want to sell. They have to sell what they can sell, and fast. Gold and silver were super liquid, so they basically became the ATM to cover massive losses somewhere else in the system.
Okay, but it gets even crazier. Because underneath all of this technical selling on computer screens, there was this giant structural break happening between the paper price in the West and the demand for actual physical metal in the East.
Get this. At the absolute peak of the panic, physical gold and silver trading in Shanghai were going for a massive 22% premium over the paper futures contracts being dumped in New York and London. That's not just a tiny little pricing difference, that is a fundamental breakdown of the global markets.
So the key takeaway here is that you had two completely different things happening at once. The West was just frantically selling paper contracts to get cash, which crashed the on-screen price. At the exact same time, the East was buying up all the physical metal they could get their hands on, and they were willing to pay a huge premium for the real thing. And that brings us right to this moment. We're at a massive fork in the road, where the data points to two totally different futures. One path leads to a historic recovery, and the other could be the start of an even bigger collapse.
So how do we tell which is which? Well, here are the specific, measurable clues to watch for. A real bottom is going to have super high volume, real money pushing it up. A bull trap, that bounce will be on weak, anemic volume. Does Bitcoin get back above its key level? Does that crazy premium in Shanghai start to shrink? These aren't opinions, right? These are the data points that will either prove this recovery is real or expose it as a fake out.
So, knowing these two scenarios are in play, how can you approach this wild volatility with a clear head and a solid strategy? Because let's be honest, going into this without a plan is just a recipe for disaster.
All right, for the long-term investors out there, if you believe the big picture reasons for owning metals haven't changed,
things like massive government debt, currency printing, then this whole chaotic episode is basically a gift. It's a mathematical opportunity to buy more at lower prices using a dollar-cost averaging strategy, which takes away all the stress of trying to time the absolute perfect bottom.
Now, for the tactical traders, people with a shorter time horizon, patience is everything right now. Jumping in here is a coin flip. It's a pure gamble. The professional move is to wait for confirmation, like seeing a solid daily close above $85 in silver, which gives you a much better risk-to-reward setup. Chasing this bounce could be catastrophic if it rolls over.
And what about for those portfolios where the #1 rule is don't lose money? Well, for conservative capital, the signal here is pretty simple. Stay on the sidelines. When an asset class is this volatile, it's not preserving wealth, it's a casino. The smartest move is to just wait for the dust to settle, even if that means you miss the first leg up of a potential recovery.
There's an old saying on Wall Street, and it exists for a reason, especially in moments like this. Surviving a bear market so you can fight another day is way, way more important than that ego-driven need to brag that you bought the absolute lowest price.
At the end of the day, what we just witnessed wasn't really about price. It was a massive transfer of wealth. $10 trillion moved from the hands of people who were forced to sell to the hands of people who were patient and prepared. And the data, very soon, is going to tell us whether this incredible bounce was the start of a new bull run or just the last chance for trapped sellers to get out.